Hey guys, how's it going? Hope you're doing well. About a year ago, I made an investment video talking about my 2020 investment goals. And well, this turned out to be an unprecedented year. Things didn't go as planned. So in this video, let's talk about what I accomplished in 2020 and what my plans are for investing going into 2021. So let's get into the numbers of my investments. At the beginning of the year, I started with a brokerage account and Roth IRA with Vanguard, a brokerage account and Roth IRA with Schwab, a brokerage account with Robinhood, and then I'm a government employee, so I have the TSP, which is the government's 401k retirement account. During this year, I added 2 more brokerage accounts. I have a Fidelity account now and a Morgan Stanley account. Let's go through the numbers and the reason why for all these accounts. First up, with my Morgan Stanley account, I only got this to apply for the American Express Morgan Stanley Platinum card. I get the annual fee waived because I'm in the military. It's free value for me. Once I cancel this card, I am going to pull my money out of this account and cancel this account. I do not like my Morgan Stanley brokerage account. They have a minimum withholdings requirement of $5,000. So I put in $6,000. It's 100% in government bonds. And once again, as soon as I can ditch this account, I will. With my Robinhood account, I only have about $25 in there. I don't use it. It's a fantastic app, but the customer service for Robinhood just leaves me wanting. I don't feel like I can confidently get a hold of somebody should I have a problem with my accounts. Additionally, there's a lawsuit against Robinhood now because they don't fill orders at the best price. In addition, they had numerous outages during 2020. Their edge for the last couple years was zero commission trades. Now that all the other big banks have adopted this policy, I don't see what Robinhood's advantage is other than their slick user interface. For the rest of my investments, I have to reiterate a point I mention in most of my videos, in that the long-term average for the S&P 500 index fund with capital gains and dividends reinvested is 9.8%. If you're investing on a longer than 20-year period, you can expect to earn per year, in the long run, 9.8%. I always get people in the comments who argue with me and say this isn't true. You can Google it and look at the numbers for yourself. It is true. And with the government TSP, I have about $31,000 invested. And my investment goal for this year is to keep contributing about $600 a month. I'm not trying to max out my TSP this year. The max is $19,500. The reason why is because the more I learn about finance and investing, the more I realize I don't want to work a job until I'm 60 years old. And retirement accounts are the tax-advantaged, better option, but I'm going to need money in taxable brokerage accounts. I'm going to need real estate or investment properties if I ever want to quit my day job before the age of 60. And within my government TSP, once again, this is the government's 401k. I am 100% for contributions and allocations in the C fund. What is the C fund? It is the S&P 500 index fund. What did it earn this year? It earned 13.9%. What did it earn last year? 31%. What was its 3-year average? So 15% a year. 5-year average, 11.7% a year. 10-year average, 13.5% a year. And over its lifetime, so 32 years, going back to its inception in 1988, it has averaged 10.66% a year. Right now, the S fund is doing really well, and I've had a couple people comment, Jake, what about the S fund? Should I be in the S fund? The S fund is small caps. This is the US Dow Jones completion average. It's up 22% this year, so pretty good. It's beating the C fund. But when you look at the long-term averages, 1 year 27, 3 year 11, 5 year 9, 10 year 13, lifetime 9. The C funds is just slightly better, which is why I go 100% C funds, and I tell everyone 100% C fund. However, if you want to mix it up and do maybe 80% C fund, 20% S, or 50-50, you can do that. It doesn't hurt anything. And when I think about retirement accounts, something that gives me comfort is just imagining, well, what if I stopped contributing to this account? Changes in my life occurred. The money I've already invested, what is it going to give me when I actually go to turn age 60? And current principal, $31,000. Let's say I stop contributing to this account. I'm currently 36, so I'll be 60 in 24 years. At an interest rate of 9.8%, I would have about $292,000 in this account, which is pretty good. Next up, we have my Vanguard Roth IRA, and I opened 2 Roth IRAs because I wanted to try 2 different accounts 3 years ago. However, I don't prefer Vanguard's interface, so I'm going to be making my contributions in the future to my Schwab Roth IRA. But right now, I have $11,000 in my Vanguard Roth IRA, and it's 100% in VivaFax. VFIAX. What is this? Well, this is Vanguard's S&P 500 index fund. Expense ratio 0.04%. Year to date, it's gotten me 16.8%. Over 5 years, 13.9%. 10 years, 14.1%. Since inception, only 7, but that's because they created this fund during the 2000 crash and then went through the 2008 crash. So it didn't include any of the tremendous growth we saw during the 90s. A lot of people prefer VT-SAX. This is Vanguard's total stock market index. Once again, this is a fantastic fund. It also does pretty well. I just prefer the S&P 500. So in my Schwab Roth IRA, I have about $9,000, and it is 100% in SWPPX. What is SWIBPIX? And that is Schwab's S&P 500 Index Mutual Fund. Expense ratio 0.02%. Year-to-date return, let's see here, 18% or 16.8% year-to-date. 3-year average, 13.45. 5-year average, 15. 10-year average, 13. Over the last 15 years, so this will include the 2008 recession, it's 9.64% per year. So between my 3 retirement accounts, I have currently about $51,000, and it's 100% in S&P 500 index funds. If we just think about, well, if I stop contributing to these, how much money will be there in 24 years by the time I turn age 60? And it should be close to about $480,000. Okay, now this is where I might start losing people, but I still have 3 ordinary taxable brokerage accounts with Vanguard, Fidelity, and Schwab, and my plan in 2021 is to use all 3 of these accounts. And if you saw my video I made in June, I talked about the best ETF to buy right now. That ETF, in that video I explained why, but it is Vanguard's MGK ETF, Mega Cap Growth, and the expense ratio 0.07%. Year to date, it's up 40%. Holy cow. And I explained in the video, but I was buying individual stocks at the beginning of the year, around March or April, but I just wasn't feeling comfortable given the uncertainty and the volatility of this year. So I ended up selling all of my individual stocks and putting all of that money into this ETF. I didn't feel comfortable buying these individual stocks, but I did feel comfortable buying an ETF of a mixture of all of them. So MGK, 56% of its holdings was these 10 companies: Apple, Microsoft, Amazon, Google, Facebook, Tesla, Visa, Nvidia, MasterCard, Home Depot. All of these companies just crushed it this year, so this fund was pretty impressive. From when I bought in to when I sold out last month, over my cost basis, I made over 20%. If ever you don't feel comfortable buying individual stocks, you can look at ETFs and say, what ETF is a mixture of companies that I would feel comfortable buying? And this ETF, I selected it because it was a mixture of tech stocks, Apple, Microsoft, Google, and consumer discretionary. So for example, Amazon and Home Depot. So for my 3 taxable brokerage accounts, I'm going to employ 3 different investing strategies. For my Vanguard account, I'm just going to be buying S&P 500 index funds. And I probably won't be putting any money into this account this year, but this account really is my end game strategy. I want to earn enough money in my other accounts to one day cash it all out and then just buy VivaFax or VT-SAX. How much money do I need in this account to retire before the age of 60, before I can collect my retirement funds? it's probably going to be a couple $100,000, ideally to live on until I can make it to using my retirement accounts. And for my Fidelity account, I'm going to start buying and selling individual stocks, and this will still be a long-term buy and hold strategy. I'm just going to be putting money into individual companies. On my YouTube channel this year, I will do stock reviews and explain all of my purchases or sales of individual stocks. And this will all be occurring within my Fidelity account, and I'll give updates and people can follow me to see what I'm buying and selling as far as individual stocks. And then in my Schwab account, I am planning on doing a brokerage account challenge. So I'm going to start with $25,000 on January 1st, and my goal by the end of the year is to double my money, get a 100% return on my investment, and I'm going to do this through swing trading and selling options. I don't like buying options, put and call options, because of theta decay, the value of the contract gets less valuable over time. However, selling put options to me, I think, is the real moneymaker. So on my YouTube channel, I'm going to document all of this, every trade, every decision I make. I'll probably be uploading 1 or 2 videos a week talking about my Schwab account, but I'm going to be swing trading and selling options contracts, and I think it's going to be a lot of fun. So what do I hold in these 3 accounts? Only $3,000 in my Vanguard brokerage account. I currently only have $5,000 in my Fidelity account. And then I have $25,000 in my Schwab account. And that's the money I'm going to start with for my brokerage account challenge. So what are my investment goals for 2021? Goals are really important. I recommend you form your own. And number 1 is to max out my contributions to my Schwab Roth IRA. That's $6,000 a year, so I might put in $1,000 a month for the first 6 months, kind of to dollar cost average in. I'm then going to be contributing $600 a month to my Roth TSP, and that should get me to a total by the end of the year of about $8,000. I'm definitely not going to max this out because I want to focus on my taxable brokerage accounts. I need to start building up wealth that I can use and live on before the age of 60. My third goal is to double up my money in my Schwab investment account. I don't know if I can do this. I've been studying a lot, doing a lot of research. I didn't want to make any videos on this topic until I was confident that I knew what I was doing and I wasn't going to come off as a fool. But this could blow up in my face if it's just a very bad year for the stock market. Either way, I will be documenting it on this channel, so definitely follow me for that fun. And then investment goal 4 is to contribute about $4,000 a month to my Fidelity account where I will be buying individual stocks. And I don't know how many individual stocks I'll end up holding this year, but I definitely can see myself using Fidelity for the next couple years to continuously add individual companies to my portfolio. And then 5, I would like to use the VA loan to buy my first property this year. The VA loan allows me to have no money down to buy a property as long as I live there. Currently, I'm renting. I've never bought a house. I don't own a house. So I think as far as 2021 investing goals, this should be a priority for me in order to diversify my my assets. And then finally, I want to say that this video in no way is any kind of weird flex. I want to remain humble, and I'm going to be completely honest with you guys. I've only been investing for 3 years. I'm currently 36, about to turn 37. I started this process at 33, 34, so I haven't been doing it very long. However, I did reach a point in my life where I had an awakening where I said, I need to be more deliberate and purposeful with my money. I need to start saving and investing today so that I'm not scrambling to do this in my mid to late 50s. I'm also incredibly fortunate that I'm making very good money between my Air Force job and this YouTube channel. I realize some of these numbers to some people can just be, kind of overwhelming. But I want to be transparent with my finances because I want to help other people. I want to help other people save and invest today to set themselves up for the future. And I do believe that anyone can do this. Maybe not swing trading or, trading options, but anybody can be an index fund investor, buy and hold over a 20-year period and expect to have a good nest egg to live comfortably on in the future. And there you have it, guys. That's my investment strategy for 2021. I am going to be making a lot of investment videos in 2021, way more than I made in 2020, and it's going to be exciting. I'm really looking forward to it. Okay, guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. In addition, consider subscribing to my channel if you haven't already. If you have any comments or questions, or you have your own investing goals, let me know in a comment down below. I love hearing from you guys. And until the next video, take care.